Welcome to Don't Retire, Graduate, the podcast that asks you what you want to be when you grow up so you can graduate into retirement with purpose and with passion. I'm your host and valedictorian, Eric Brotman, and this is our Season 6 finale. Our all-new season starts in January 2026, and we have some terrific guests lined up, so please subscribe and never miss an episode. Today, I'm pleased to be joined by Hannah Cole. Hannah's a tax expert and the founder of Sunlight Tax, specializing in helping creative individuals manage their taxes effectively. She offers resources, including her new book, Taxes for Humans, Simplify Your Taxes and Change the World When You're Self-Employed, and a podcast that provides guidance on tax deductions and financial management for creatives. Her approach is designed to empower self-employed artists and freelancers by simplifying tax concepts and providing practical advice tailored to their unique needs. Hannah, welcome to Don't Retire, Graduate.
Eric, thank you so much for having me. It's great to be here.
So first, I have absolutely no shame in saying that you have more copies of this than I do, but I do have one and I did read it. And I want to talk about it today because I know it's hot off the presses. I congratulate you on a major undertaking. Writing a book is no small feat. What possessed you, I guess, before we even get to the book, what possessed you to leave an art career and go into a tax career? Because I think that is using two different sides of your brain very significantly.
Sure. Well, I never left art. I'm still an artist. I have a gallery that represents
you're
me.
doing
I have
both.
shows. Yeah, I do both. I was attracted to taxes because it's seasonal. So actually part of what I started doing, life evolves, was I do, I run a tax season and then I shut the door and I go to the studio.
Okay.
Yeah. So I kind of am in one mode or the other. But what kind of inspired it is just that as a professional artist, I found it very difficult to get good information about just, running a small business, doing the tax side, bookkeeping, paying quarterly taxes, those things you need to do when you're self-employed. I think people in STEM fields and business school, they get great resources and access to information like that. But there's a lot of stereotyping of creative people as though we're bad at this. And we often are very under-resourced in these kind of skills and this kind of education. And there was a real cultural disconnect when I tried to talk to accountants because they really did not get kind of what a professional artist looks like, does, what a valid deduction might look like for me. And so I decided to go back to school and actually train in it so that I could bring this information to the creative community.
Well, I love that you still have one foot in each pool, because that allows you to be very relatable to certainly the audience you're speaking to. I found some things in the book that were fantastic. I really enjoyed the way you broke down whether or not you needed, for example, an LLC or an S corporation, or whether you wanted to get, and there was some technical information here, but all of it I thought was presented in a way that was really accessible. And so I give you a lot of credit. Writing a book about taxes, how many people pick up a book about taxes and go, I got to read this? And yet you've made this so relatable that I think I think people will pick this book up and will learn from it. And not just creatives, freelancers, but also any small business owner, anyone who's thinking about, leaving their hobby. And you do a great job of explaining the difference between a hobby and a starting business and so forth. So there's some really good stuff here. I need to first ask where you came up with the concept, and this is a PG show, by the way, of the tax dominatrix, because, when I first read that, I did a double take, and then I saw the graphic. There is a dominatrix next to the 1040 here, I think. Where did you come up with that? Did somebody give you that nickname, or did you just make that up on the spot?
No, that's mine. That's because, for the listeners out there, it's a pretty PG dominatrix.
But, very much so. Yes, very much.
Yeah, she's cartoonish. But the reason that she's there is because, well, one, I really care about it being a very readable, book with a sense of humor. And I was thinking, in taxes, there is this hard edge. Like, there are deadlines, there are punishment, there are penalties. How are we going to deliver that sort of tougher information? And I was like, well, what's the most fun possible way to deliver that? Let's do a dominatrix. But in my in my business, I actually talk about how, like, I'm sunlight 95% of the time, right? Like, you can do this, you got this, let's go, let's take advantage of what the tax code in every way that you can. But then I'm 5% dominatrix, because at the end of the day, all right, now's the deadline, you got to get this done.
That's, first of all, it was the first thing that I grabbed onto and said, oh, I'm going to enjoy this, because, that is already creative and I'd never heard anything like it. Clearly there's a little Jekyll and Hyde going on in your world, for you to be 5% in that camp. But, I really thought you did a terrific job, and you described something in the book called the power triangle, which I thought was also very helpful and helped to set up the reasons behind some of the whys you need to tackle these things. And you talk about the trio of tax smart saving, tax planning, and investing. Can you talk a little bit about where that came up, where you came up with that, and maybe what would have joined the rectangle or octagon or rhombus had you added some extra things to it?
Well, I wanted to keep it simple, so I would go for as few elements as possible. This is your world. I mean, I sort of the book kind of hands off to you at that point, but I'm speaking really to a lot of people who feel a little allergic to money and feel a little scared of it. And so just a lot of times people in sort of care-based fields, creative fields are really not even thinking that retirement is for them. I know you don't like that word, retirement, but like, it's like,
well, I do like the word. I just don't like the way it's defined a lot of places. But yeah, I know. I think retirement's a great thing. Yeah.
No, you have a beautiful rebrand of it. I think it's really awesome. So it's sort of like, I just wanted to kind of package those concepts in a way that feels appealing, and that kind of, I think a lot of the words, tax planning, like from my business, I can tell you that my tax planning workshops are the least popular workshops I run. I am here like, hey, this is where you get the good stuff. This is where you get capture all the tax credits you could, and like make sure you're getting every deduction. This is what you should want. But it's funny because I think a lot of people feel like, oh, that's like tax stuff and it's optional. Forget it, right? It's almost like, I don't want to deal with taxes any more than I absolutely have to, so I'm not going to do that stuff. So just to me, I've had an awareness that there is a group of people out there who are really averse to getting into even stepping in the doorway, Erica, of the world that you operate. And so I'm just trying to make it feel a little bit more like tax planning is like finding all the coins in the couch cushions. It's not like working harder. It's just getting the money you already have to work harder for you. So,
well, I think people confuse tax planning with tax filing or tax reporting or tax paying. Tax planning is a process that really is kind of like finding the bag of money. Tax paying is painful. It's writing a check for something you don't necessarily want to write a check for necessarily, or you certainly don't control exactly where it goes. And then, of course, when you start talking about taxes, some of them are easy to avoid legally or reduce legally, and others are not. And there's a big difference between tax avoidance and tax evasion. I mean, you talk a little bit about, right. Yeah. And you talk about the criminal element trying to evade taxation, which, I would never defend. And I think it's, punishing those who break the law is one thing. I do think the laws are so convoluted and they're so bastardized that, I think the U.S. tax code, I believe, is the longest book ever written.
I'm not surprised by that. There's a design. There's a design issue here that, good design means editing. And it's just the problem with the tax code is it's additive. We just add more to it. Nobody goes back and edits it out again. And we're maybe way over, like 100 years overdue for that.
At least. And can you imagine how horrible that project would be?
Oh, it would. And thankless. It would be thankless.
Think about the folks who edited your manuscript. Having written books, I know people, and you labor over every word, every sentence, all the design, all the things. And, at the end, you just sort of say, all right, it's never perfect. It's good. It's done. Yeah. The tax code, to go through that would be, a special kind of torture. And I'm sure there are people out there who go, I want the gig, I would tackle this, but it's not a romance novel. It is a horrible read. And it's section this and code that and section this. And I think it's one of those things where there are more end notes than actual content, because there's an exception to every single rule. And there's so many different ways to game this. And so, Hannah, I'll ask you, because we've had lots of CPAs on the show, and I don't love necessarily talking about taxes. I do love talking about tax planning. We've had a lot of CPAs on the show, and what I've said to them, and I'll ask you the same thing, is if I were to hand my stack of stuff for April 15, it's March 1st, I've gathered all the things, and you do a nice job with the checklist and the things to gather, but I've gathered all of it, and I go, here, Mr. or Miss CPA, will you please handle this for me? If I gave it to 10 different CPAs, I believe I would get 10 different tax returns.
I think you're right.
That speaks to what I think is a problem where this is, and I dare say it to you, it's more art than science. And since you do both, maybe you're the absolute best person to talk to. I think if you're going to get 10 different tax returns and they're all legally acceptable, then the nuance level to that is just terrifying. Like, how do you know as a taxpayer whether you got the best tax advice or lousy tax advice? How do you know if you put everything you needed to into the system, the TurboTaxes of the world, or whether you should be using an H&R Block or a Jackson Hewitt or somebody just to file your taxes, or whether you need a CPA or a team of CPAs, or there's such a spectrum of advice. How do you know that the advice you're getting is good if somebody else just as credentialed would give you a totally different answer?
I think this is a really tricky problem that you're pointing to. I think it's very opaque. It's very black box to most taxpayers. And unless you really have an understanding of taxes yourself, which I do think is a problem I am attempting to solve with this book, is giving a lot of that why behind the tax decisions to people. But I think, especially just the way that the tax industry works, it's a volume industry. You're gonna, somebody who's doing taxes is just almost like filter feeding, just saying yes to every client and doing them as fast as humanly possible, putting everybody on extension at a certain point and just going through and trying to extend their season a couple months after that. And that is not a person well positioned to talk to you with thoroughness about what decisions they may have made within your tax return. As a tax practitioner myself, I always try to, when there's a decision, anything that's sort of black and white, fine. But places where there's a decision to be made, I always want to bring the client in on all of those. So I will keep a list of sort of decision points for discussion. Not everybody does that. And if you're not charging enough as a tax person, you don't take any time to do things like that. And so those clients just never know.
So you mentioned sort of the fee structure, and one of the challenges there is that creates the structure of who can actually afford decent tax advice and maybe who can't, which you talk about in the book pretty significantly as well, saying, well, if the people who have a huge team of CPAs and can spend a fortune to save a fortune are very different than, the average couple or the average individual business owner or family or whatever, most folks don't have that luxury or ability, or frankly, aren't sure that they'll get enough juice out of the squeeze.
That's absolutely true.
If you pay an accountant 4 times what you're paying your current accountant, are you going to save 4 times or more in taxes? Maybe not. I mean, it's not quid pro quo, right? You're not. So where is that decision made on how much advice do I need? How much planning do I need? What should this cost me? I mean, when we're not CPAs, we don't do taxes. We do financial planning and wealth management, and we refer out tax business to people. And it's getting harder and harder to find CPAs who even want to do taxes because the profit margins are so slim, and because you can't get young people to join the field because none of them want to spend 100 hours and eat all their meals at their desk for 3 months every year. I mean, people don't want the job anymore. So, what do you do in an industry that is reinventing itself? I mean, you've got the robo pressures. So the TurboTax didn't put CPAs out of business, but it may have put some lousy ones out of business, which isn't a bad thing. The good ones didn't go out of business, right? How do I, as a financial advisor, how do I find competent tax advice in the price range that's appropriate for a given family? How do we navigate that?
I mean, I don't have an answer. I think it's very difficult. I'm literally wrote a book to try and help people do taxes on their own. And I have a triage section inside the book that, triages, here's where you can do it yourself. Here's where you shouldn't do it yourself. These are the scenarios where you do want some professional help. So at least we can sort out who actually really should be paying versus who can DIY it. I personally, when I am recommending, the way that I want someone to approach a tax professional, I say, if you're not feeling respect in the room, I wouldn't try it all. I would leave. Because to me, I have been on the receiving end of a disrespectful accounting experience. It's why I formed my company. And so to me, that's primary, because you're not going to be able to ask the questions you want to. Taxes are actually really vulnerable. You're talking about your income, your financial decisions, how much society values you with pay. So it's a tender thing. To me, the respect is really primary. And then, beyond that, I think there are some red flags to look out for. I think some people, the problem is that some people, what they want is a tax person, or what they think they want is a tax person who's super aggressive. They want somebody who's just like, yeah, we can deduct that. Yeah, we can deduct that. Bring it all. We can make that a deduction. And just like, but the problem is you might not know as a taxpayer, if you work with someone who's being too aggressive, that person might be kind of skirting the line in a way that's dangerous to you, and you might be more in the crosshairs for an audit. And so ultimately, you'll be miserable that you chose that person when you get that letter from the IRS. So there is a bit, I actually think it's a place where conservatism is quite positive, and you want somebody who's like, that's not a business deduction. We're not going to push that. I actually think that's better, because that's somebody who's like not taking chances with your tax return.
So years ago, I was a victim, like so many, of identity theft, and and now have to get a PIN to do my taxes, which actually I think we should all get anyway. I think that just makes sense. But I get a letter every year from the IRS with my PIN, and just the letter with the PIN scares me to death, because I see the envelope from the IRS, like I know that's not a Christmas card, Hannah. That is a different thing. And I see it, I'm like, oh, my PIN, fine, good. Whew. But your blood pressure goes up exponentially when you see IRS on an envelope coming your way.
I know it happens to me too.
Terrifying.
It's terrifying. I'm an enrolled agent, so my license is from the IRS, and I get correspondence with them all the time, like time to renew your enrollment. And I freak out too when I see that logo in the mailbox.
Okay, well, isn't that a sign of an issue that we should try to resolve? That if the IRS really is that much of a troll under the bridge, that there's got to be a different way to approach it. Like everyone's terrified of it. Like it's like they're coming to get us in some way. Even if you've done nothing wrong, the idea of an audit, and you talk about what to do if you're there and how to get counsel and all those things, but it's a terrifying thing. Is there a better way than our current system in your mind?
Well, I actually think that sowing terror of the IRS is a strategy being used. And so it's kind of deliberate getting placed there. If you're honestly, I deal with the IRS quite a bit. They're so kind. They're generally so easy to work with, especially if you compare them with the state offices. And that makes sense. States often have balanced budget amendments and cannot work on a deficit, whereas the federal government can. There's something that makes you more forgiving when you are the body that can print money. So states are a lot more aggressive and a lot more difficult to negotiate with. The IRS generally is like pretty easy, to be honest. I find that they don't really deserve the reputation that they have.
But yet when you see the mail from them, you still have that visceral reaction. Even though you don't,
because I live in the society too. Yeah, I know.
Okay, but if you know that the wizard behind the curtain isn't terrible, then why does it still create that visceral reaction for you? If you, I mean, how did they become so vilified that they're terrifying? If you know different and it still creates that for you, isn't that a sign of something? Isn't that's not just societal? You of all people should know better. You're the enrolled agent. You work with them all the time, and yet it's still like, uh-oh.
Well, I mean, I'm not going to, enrolled agent or not, I'm not going to tell you that, going through an audit is my idea of a fun weekend.
Fair.
I mean, it is the
fair.
check and balance in our system. And I recognize that the fairness within that, and that, if every single year I'm not audited, the IRS is trusting me on every deduction I put in my tax return. Of course, they should have the right to look once every 10 years and be like, all right, let's just check and see that you're not making this up. Right? I actually think that's legitimate. Do I want to go back and pull out all the receipts? I have a pretty good system and I'm not scared of it and I can do it. But is it my idea of fun? No.
That's fair. Well, so you write in the book, among other things, that if you owe money to the government, pay your state first. And you just talked about how the state can be a little less forgiving and some of the reasons why. And I thought it was interesting because I think getting a letter from the comptroller of your state seems somehow less terrifying than getting a letter from the IRS, despite the fact that wizard behind the curtain might actually be a tougher out. But it doesn't have the same weight, the same gravitas. How did they manage to be the bad guy, so to speak, and still paint themselves as better than the IRS? What kind of marketing team do they have? That's like public relations 101.
I think it's the PR against the IRS. I think, honestly, if you are somebody who's super, super wealthy and you want to cheat on your taxes or just not pay your bill, which we have a $600 billion tax gap in this country from wealthy people who simply do not pay the tax bill that they owe. And the IRS doesn't have the enforcement to go after them. And the reason is that they pay for these lobbying groups to paint the IRS as this evil institution that everyone should fear, where it's really pretty helpful to fund the IRS from my standpoint, because it means when I call them because I need help with my PIN, they pick up the phone, right? I want a well-funded IRS, and I frankly want a well-funded IRS to go and collect that $600 billion that, the top, 0.01% are not paying just because they can afford to not pay. The IRS doesn't have the it costs a lot of money to collect the taxes from a tax cheat who has an army of tax accountants and lawyers. So that's the reason why that campaign against the IRS exists. It's not really for your benefit or mine or any of your clients. It's for the benefit of people cheating on their taxes in the top of the top 1%.
So there was some stuff in the book that caused me some pause, and I want to be I want to bring this to light and see what your thoughts are, but particularly the estate tax, because I am an accredited estate planner and I do everything humanly possible to help families find ways to avoid that tax. Because it does feel like confiscation from the dead, and it does impact families. It impacts folks who own farms. It impacts folks who own businesses. It impacts folks at various levels. Now, you state that there are only 1,500 estates in the U.S. that would be impacted by it, and the federal estate tax limit right now is especially high. So you're absolutely right. Right now, where that limit is now, I remember when the limit was only $600,000. I think I'm older
it's changed
than you,
a lot.
but I remember when it was $600,000. Now it works out to be like $28 million. Which most families don't ever have to think about. But at the state level, and we talk about the state versus the federal. At the state level, estate taxes are very real and are hitting a lot more families, and it's causing migration. It's causing migration of families of means from one state to another. You're in a very favorable state from that standpoint in North Carolina. I'm in a very hideous state in that standpoint in Maryland. And so we spend a lot of time thinking about what are the ways to avoid this. We do webinars and education around estate taxes. And what we're really talking about is the state, not the federal.
Yeah, that makes a lot of sense.
So I think when we talk about death taxes, and you made it sound like death taxes was something made up because of an evil group of people trying to paint it a certain way. And what I would say is kind of is a death tax. It's paying taxes beyond the grave for passing assets on. What is the solution? I'm going to put you on the spot. What is the solution to the desire to not allow wealth necessarily to continue to grow exponentially and infinitely? And why? First of all, why is that a bad thing? But second of all, what is the solution around that at the federal level? Is there a better way to do it than to force an estate to liquidate certain things, particularly when they're illiquid, and that's challenging?
Yeah. Well, first of all, I really am only addressing the federal estate tax, and I don't really have an argument with you about the states. I know that they vary tremendously. You know, Massachusetts, New York, Maryland are kind of a different story from Florida and Texas. So I'm not really, those thresholds you may find very unfair, and they may legitimately be unfair. I mean, that's a conversation. I don't address it at all in my book. I'm talking about the federal threshold, which is really high.
It's really high. Right now it's really high, although it's low-hanging fruit for one administration versus the other. I mean, that's one of the limits that gets changed the most because it impacts the smallest number of people, so it's really easy to create popularity around it. Getting 99% of the population to say, yes, let's tax that 1% more is not a hard vote to get. It's also not really what happens because the wealthiest people have ways to avoid this legally because of the enormous tax code that we have. So if we want people, if we want people to be paying more for whatever reason, shouldn't we simply change the tax code to make it so that there's less gamesmanship and more fairness in the code?
Oh, absolutely. Yeah.
All right, good. Then we agree on that. We agree on that.
I'm all for fairness. That's all I want in this world. Yeah. Fairness.
All right.
Absolutely.
So I'm going to throw something else at you, and I'm having fun with this, Anna. And I enjoyed your book. I enjoyed getting to know you. I love the fact that you're both the artist and the tax person, that you're using both sides of your brain. I want to throw something out at you for your opinion as a tax expert.
Mm-hmm.
All right. I'm going to put you on the spot because it's my show and I get to do that. Government sometimes uses taxation as a way to curb behavior, right?
Mm-hmm.
So a cigarette tax, an alcohol tax, a gas tax, things that are taxed in the hopes that people will conserve or use less of or stop using or not do anymore. So why are we taxing income? Why in the world would we have a system where it disincents people to go earn more, where there's a tipping point where it doesn't make sense to work anymore, as opposed to finding a way to do consumption because the wealthiest families are going to consume arguably the most? The VAT tax to me is far less offensive than the income tax because it penalizes something we think is a good thing. At least I think is a good thing, which is go be more successful and earn more money.
Yeah, I agree that we should have a VAT tax. That VAT taxes can be very fair. I've spoken and I interview in the book William G. Gale from the Brookings Institution, the Tax Policy Center, and he has some really great writing, which I would be happy to link to in the show notes if you want, but about how, the sort of basic fairness behind a VAT tax and what a really good structure for one is. I'm not sure I can tell you every detail of that here, but yes, basing it on consumption. I mean, the problem is we have sales tax. Sales tax tends to hit lower income people much harder and be a regressive tax. A regressive tax, just for your listeners who don't quite clock what that means. It means a tax that hits people with the least money the hardest and is the least burdensome for people with the most money. Poorer, lower income people spend most dollars that they bring in. And so for that reason, sales tax is considered regressive because almost all their money is subject to sales tax in that way. Some states have exceptions. Massachusetts has exceptions for groceries and necessary clothing, non-luxury clothing and things like that. So I think there are ways to make it more fair. But the very wealthy, a lot of their money they don't spend. They bring it to someone like you and they invest it wisely and they watch it grow and they're trying to not spend it, which of course is positive. We want that. But so a far less proportion of their income is getting taxed because they're not consuming with as many of their dollars.
So some of this is framing too. I mean, you talk about the framing of the death tax or tax reform, and you politicize it a little bit, but you certainly go to a point to say this is what those words are designed to mean. I remember in Maryland here when then Governor Martin O'Malley decided that he was going to propose an increase to the sales tax, and it went from 5% to 6%. And he said, "Well, it's only a 1% increase." One could argue it's also a 20% increase on the actual amount of tax being paid. So if you're in the camp that says
if we're in the world of investing, we know seemingly small percentages can have a huge impact.
Oh, huge. So yeah. when I look at that, I think, but again, it's the messaging, because the country is so split politically, and I don't have to tell you that, we all know that, but half the people were saying this is a 20% increase, and the other half were saying it's only 1%. And they were both right. Mathematically, they were both right, but it's all the messaging you hear and whether you think this is a great thing or a lousy thing. So I throw one more thing at you from a tax perspective. I saw a proposal years ago that I thought was the best proposal I'd ever seen from a tax standpoint. And I'm not going to tell you who made the proposal because it might change the way you feel about it, but it was related to a flat tax. And it was related to a tax that would have a threshold under which no tax was paid. And this was an income tax. There were a threshold where no tax was paid, and it was the same. So people who paid no income taxes now would still pay no income tax. But there would be a flat tax on every other dollar, and there would no longer be deductions, exemptions, credits, or anything else. It would just solve the problem and largely eliminate the need for all of the filing and all of the time and all the paperwork. And of course, CPAs hate it because we wouldn't need CPAs the same way. For audits, we would. But if a flat tax were able to be implemented such that it was done on income automatically and there was no gamesmanship, would you consider that potentially fair if it still excluded the 50% who aren't paying income taxes now, arguably, by having a $50,000 or $60,000 exemption per household?
I love the idea of simplifying the tax code. I think that's a positive thing for everybody. I'm also interested in fairness. I don't care who proposed it, as long as it's, fair and equitable. Great. I will consider anything. I think I'd want to look at the details and see where the impact would land, because to me, that's what would make it fair. And I don't have that data here with this scenario. A lot of times the stuff that feels complicated is actually to create equity. And so complicated doesn't always mean negative. Although, of course, something that I think would be great would be that we all don't have to file a tax return. There are other countries that do it that way. In Spain,
yes, that would be lovely.
You just get a letter that says, like, here, we already have your basically Spanish equivalent of your W-2. We've already got the taxes, like, you're done. And small businesses, the people that I serve, would still have to file a piece of a tax return to adjust for what their business deductions were. There's no way for the government to have any insight into what you spent running your podcast.
Right.
So it's hard to get around that one, but it would, and honestly, that was killed by lobbying from the tax industry. That is possible. We could do that in the US. And I actually think that would be wonderful. I would support that.
Then I'm delighted. We've crossed a lot of bridges today, and you and I can run for office together. No, we can't. We won't. I'm not electable, but we could definitely talk taxes anytime. Where can folks learn more about you? Where can they get a copy of this book, which I do think, particularly for business owners or for people who are trying to DIY, is a really valuable resource?
Thank you so much. And then go get Eric's book, because it helps you once you've learned that the power triangle is actually there to help you and not scary, and go get help doing it, implementing it. People can find me at sunlighttax.com. All the links that you would want. There's a link to my book, Taxes for Humans, there at sunlighttax.com. There's also a free visual guide to tax deductions. So if you are running a side hustle or have a small business or self-employed, I have these. This is where being an artist is very helpful. It's a beautifully designed visual guide to tax deductions that you can get there.
Very good. And before I let you leave the show, particularly being the finale, no pressure at all, but you are the last person in 2025 to tell us what you want to be when you grow up. And so that's a big deal. What do you want to be when you grow up?
Oh, I want to be so many things. I don't want to have to choose.
Spoken like a true artist. Okay, well,
I
what
do
is the
want to be
top
an artist when I grow up. I still do. Yeah.
Okay. We've had some great answers. We've had some people who said they wanted to be Tinkerbell, they wanted to be Superman. We've had some off the like crazy kind of answers. If you're doing the things you love, to me, you're already retired. You know, I mean, if you're doing what you love, particularly if you're financially independent, I think the goal for any family is reach financial independence and then do what you love and as much of it as possible and make a positive difference and everybody wins. I enjoyed this, Hannah, because I thought that we might have more disparity in our outlooks, and yet that hasn't been the case. We've actually come up with a lot of ideas together, and maybe somebody somewhere on Capitol Hill is listening. These are good ideas.
Yeah. And if I can add to that, I actually
Please.
don't think we all need to feel so far apart. I'm interested in a fair tax code, and I'm 100% sure that you are too.
At the end of the day, yes.
Good ideas come from both sides of the aisles, and good people can disagree. And I think these are debates about what we value in society that are valid debates, and we should have them. So I think,
we
happy
just
to talk
did.
about it anytime.
We just did, and there were no casualties, and neither of us was struck by lightning. So I guess we're in really, really good shape from that standpoint. Thank you for being on the show. Good luck with the book. Good luck with. I would love to see some of your art someday. Actually, I haven't checked that out, but I loved the book, and I appreciate you being on the show. And this is a great way to finish our season. So thanks, Hannah. Thanks for being here.
Thank you, Eric, so much. Thanks for having me. Great to be here.
I'd like to thank everyone for listening and watching today and all season long. If you enjoy our show, please share it with friends and family so they can join you on your journey to financial freedom. Our season 7 premiere will be live on January 1st, 2026 with amazing author Jeremy Kyle. For now, this is your host, Eric Brotman, wishing you a happy, healthy new year and reminding you don't retire, graduate.
Securities offered through Kestra Investment Services, LLC. Kestra IS. Member FINRA SIPC. Investment advisory services offered through Kestra Advisory Services, LLC. Kestra AS. An affiliate of Kestra IS. Kestra IS or Kestra AS are not affiliated with Brotman Financial or any other entity discussed.